What is going on, traders? My name is Kyle Williams. Welcome to the Clover Trading Channel, and I have something to share with you guys. That something is that I'm going through a drawdown. It's not fun to talk about. It's not easy to reflect on why any one trade or series of trades I've been screwing up on, but the reality is that's what I'm dealing with. You know, it's been around 4 weeks or so, which again is not that bad. I've been through many drawdowns in my lifetime as a career of a trader. This has not been one of the worst ones by all means, but is the most recent. And in fact, I am still in the drawdown. I am still dealing with being pretty much at the low point. It could go lower. I have no idea when it will turn around, but I want to talk about it. I want to share it with you guys, and ultimately I want to teach you how it made me reflect on not just this drawdown, but really most of my year, and how it got me to kind of wake up, and hopefully the wake up call that I need to turn around and get myself out of this said drawdown. So anyways, like and subscribe, and let's jump right in. First part is like, well, how do I even know I'm in a drawdown? How would I even know what it's like out there in the markets? Well, if we see here, I track my trades. If you've looked at any of my previous YouTube videos where I really like to track and journal how my performance is doing, since the last 2 weeks of October here, very small red day or red weeks, very manageable, but it happens. But really, that was the start of what was to come in November, right? Continue the second week, right? Finished the first half of the week in October down $3,000, ended that week down another $4,000 to make it down $7,000, and then on top of that, the real kicker is when I took my biggest loss of the month to really put this drawdown in full effect, which was on AMC, which we'll talk about. And then to start this week off that I'm currently recording this video in, we're already down close just under 10 grand. So not a good start. In fact, if we actually add all these up, right, if we do a little sum formula, let's just add every single one of these weeks to show us where we're at, right? Let's even do November's borrow fees just to include it. We are just down a little over $63,000. That's not fun. No matter how far along in your trading career that you've been in, I don't feel good looking at that. Now, granted, it is a very small fraction of my account. It's a very small fraction of the money I have, and certainly a small fraction of the money I've made on the year. So by all means, don't be boo-hoo, poor me, Kyle. I'm gonna be all right. But nonetheless, it is not fun to look at something like that and be like, had I traded better, I wouldn't be in this position right now. So certainly it's not fun losing, $63,000 in the last 4 weeks, so to speak. But the best thing you can do is accept it. It's happened. It's here. I'm in it. I am in the middle of it all. The only thing I can do is reflect and improve upon what I did wrong, and hopefully weed out those things to then set myself better up to do the things that make me profitable, right? If you avoid and remove all the things that make you unprofitable, you're just that much better of a chance to start doing things that do make you profitable. And so let's review how I've gotten to this position and what I need to do going forward, and ultimately just showing you how and what my year looks like because of this drawdown, specifically in the second half of the year, again, which we'll go into later. So let's start off quickly how this started, because again, these 2 red weeks here in October are very small, very manageable, in fact, very expected, right? I expect to every now and then have healthy small red weeks. It's part of the game, right? It's part of being in a system that gives you healthy losses. And so what happened is, in pretty much both these weeks, was trades that just didn't work out too well. Trades that unfortunately weren't really, I thought they'd do well, but when they played out, it was like, oh, these are really not ideal. On top of the fact, it was just a sign of the times and what kind of market we're in. And those 2 trades was one short trade and one long trade. Specifically, the first one was HUBC. Right, if we look like a daily chart real quick here, HUBC, I was really looking forward to this 80-cent breakout, right? We topped it once, twice, 3 times, and we started pushing it on the 4th time. Now, I'm actually going to first talk about this little attempt right here when it actually pushed to 80 cents the 3rd time. Frankly, I maybe a little bit of too much anticipation. I thought it was going to break out, and so what do you see me doing? I start buying at 74 or 75-ish. I start buying again on this dip at 74-ish again, thinking it just taps just under 80 cents. I was like, if we keep holding here late day or into late day, we could eventually push up to 80 cents and then have a breakout. And that's the issue with anticipating a breakout. You open the door up to potentially deal with being wrong earlier. Now, granted, you can still be wrong when you buy the breakout, but it's more likely you have a lower chance of working when you start buying below the breakout. Now, your risk reward's a little bit better, which is why I bought in the first place. I'd rather be buying at 74, risking 65 down here, than buying 80 and risking 65 down here, right? Unfortunately, it didn't work. It cracked. It did not hold, to late day. In fact, it didn't even hold 70 cents for too long, and then it cracked, and I sold the rest when it broke down. Unfortunately, lost, I think, just under $3,000 or a little somewhere in the 2000s on this trade. On top of the fact, and then we take the next trade where it actually did break out. I said, okay, you know what? We're not going to anticipate this breakout. I'm going to physically wait as long as I can until I have to buy the 80-cent break. And what do? I do that, and it actually does work for a time being, right? It does go from 80 cents, hold it overnight, ends up getting as high as like 93, 94 cents. Now, you could say, Kyle, if you bought it at 80 and went to 94, that's a pretty good, call it 15% move. Why wouldn't you take that? Well, frankly, that's just not the kind of move I look to take on a breakout, especially on a daily chart that HUBC had. Breaking over 80 cents on a really good daily chart look like this, I thought at least should go to $1, maybe higher. So when we were in the 90 cents area, I just thought to myself, you know what, that's not it. I didn't buy this to only sell it here. And unfortunately, after adding and then trying to downsize and then not selling up in 90s, eventually it died again, and I sold it right before the crack and ended up actually being pretty ugly all the way back down to the 60s. So the breakout that I thought was going to be really, really good totally crapped itself, right? Did not have any follow through. Even when, again, instead of anticipating, even when it did finally break out and I bought, there was still no momentum and it didn't get me anywhere. Not only was I taking losses on this, but then finally when it worked, it still wasn't enough to bring out a gain of it. So that was the first frustrating trade. But again, I kept it small. But what happened even further was IBRX, my next loser. IBRX was a really, really good, at least what I thought was, an overextended stock, right? Again, if we look at the daily chart, IBRX looked like this. It had these 3 beautiful green days, and I was looking for what might be a first red day. And as you can see on the daily chart, that's not how it turned out. And again, this is the intraday. Got short on the gap down, kind of a classic overextended gap down play. Started shorting into the bounce as well. But if you notice, the bounce just doesn't stop. It really is an ugly kind of grind all the way back green. I cut it. I lose over $4,000. Another loss. Another trade that usually works, is usually in my favor, especially on an overextended gap down, and it comes back and stops me out. Okay, 2 trades now. 1 long, 1 short, both of which I've made money on consistently throughout my career, so to speak. And here I am taking losses on both of them. Right? That was the beginning. And I didn't even know it at the time because it was only 1 failed breakout and 1 failed overextended gap down, but it led to more. As we lead to here, that was kind of the end of this October month leading into in November here. And I started to try new things. I said, okay, breakdowns on first red days aren't really working out. Multi-day runners are not working very well. Let's try some gap and craps. Now, granted, if you know how I trade gap and craps, it's actually called not frequently. That's how I trade them, not really at all. But there's sometimes when I will trade them. And when I do decide to trade them is usually when there's some kind of dilution involved. Now, CLSS here had an ATM, had an active ATM that they could use. And I thought that was going to be enough of the dilution to kind of this gap up be a crap, have it kind of not really follow through, not hold its gains, and kind of fall off the edge. And it started that way. If we look at the intraday, the trade I took, it started that way, right out the open, right away. Added into these bounces, but then you just see it kind of consolidating. And more importantly, you see the volume down here really dry up and not be present. And then all you need is one big squeeze and the volume starts coming back to squeeze right back. And I cut it, I re-short, and I cut again. And ultimately it just stays in this choppy range the rest of the day. Thankfully, I didn't retouch it because it just didn't go anywhere. But again, I lose another $4,000 on this trade. Not something I typically trade, but something I was willing to take because of the dilution. But again, the dilution just didn't play out, didn't have much of an effect as I would have liked. So it sucks. But again, you add these losses up now, and now I'm down over 10 grand, right? We're heading into the 5-figure range of this drawdown. But again, that's not the real kicker of it all. The real kicker is then when I enter this week, which again, I had a couple gains on the 7th and the 8th, but AMC is what really got me. AMC is obviously the bulk of this drawdown. And what really happened was a good classic recency bias. And I'll talk about why that is. So again, for those who know the backstory of AMC here is that they have a large amount of debt due in the next couple of years. Now, granted, it's a couple of years, a little ways away, but you also don't just pay all your debts down in 1 week before the due date, right? You kind of have to ease in and slowly pay it off. And so that's what they're trying to do. And the way they're doing that is through dilution. They're, pretty much getting money from shareholders to pay off their debt. Now, they put out an ATM offering, which is them selling shares at the market price. Or at the market, which is ATM. And they had, gained, a few $100 million from this first ATM back in September. It was very likely that they were going to have to pull another ATM soon. And what they do, they announce earnings. They said they had a great quarter. That's awesome. But what do you know? The very next morning, they put out another ATM offering. And so my recency bias was saying, well, guess what? Only, not even 2 months ago, they put out an ATM and this thing dropped from nearly high 11s all the way down to mid 8s. And here this ATM is again, up in the mid to low 9 or low 8s when it opens up. I'm like, this thing should go to like $7, maybe even $6. And so I got aggressive. I got very aggressive, arguably way too aggressive. And it was one of those things where I was willing to accept the loss. I knew that if it didn't work out, it was going to be a big loss for me. The problem is I had, again, so much recency bias, so much conviction that it wasn't going to even do what it did this particular day that I thought the odds of me having to even stop out in the first place was so slim. But nonetheless, I was willing to take the risk. The problem is I think my evaluation of what ended up happening or the possibility of what did end up happening was just way, way off, right? And so I'm pretty much literally full size by pre-market. And once the market opens, that kind of weakness shifts and it ends up being strong. What turned into something that I thought was never gonna have to be seen, it's now staring me right in the face. And I have to like really consider where and how I'm gonna cut this. Now, the game plan was that I don't think this should really even tap or touch 9. Granted, it breaks over 9. And I almost kind of enter this stage of denial. Now, don't get me wrong, I took this on other accounts as well. And so I did downsize in other accounts, but this particular trade on this account, I just was kind of in denial. I was like, wow, is it really gonna hold over 9? And it, it didn't, right? It pulled back. But then when it started holding the mid 6s and then coming back into 9, I said, nope, we're coming back. I'm cutting, I'm getting out. And unfortunately, I lost 30 grand on this trade and I lost 30 grand on the other trade. So it's like 60 grand of it came from this one AMC trade, just being way too over aggressive. Like again, I was willing to be aggressive because I thought it was gonna be a really, really good fade. Obviously I was dead wrong. I don't regret being aggressive. I regret being too aggressive. I regret risking pretty much 30K in the two accounts that I took this with. It should have been like 10K each. It should not have been 30, right? It was just way, way, way too oversized on a play that I frankly just totally misread on how likely it was to play out the way I thought it would, and didn't do that. I'm accepting of the loss. I know the mistake I made. Call it greed, call it wanting to have a huge win, just call it, again, recency bias of thinking it was gonna work way smoother than it did. I was just wrong, just dead wrong, right? On size that just did not deserve it. So that was a huge, huge portion of it. Now, granted, I did make some money back elsewhere on a different trade, but nonetheless, it doesn't change the fact that we still ended up a very ugly red day of negative $44,000. Not what we want to see at all by any means. And so that's unfortunately, what led to then me going into this day and the next day, which was now I caught myself today, which is why I'm ultimately making the video of just facing the reality of the drawdown I'm in, which is now I just started trading crappy tickers that aren't even worth taking. One being INVO. I believe I actually lost money on this day too, on Friday. I tried to short this squeeze and failed miserably. But then once it had a really strong like doji day and kind of stuff candle, I thought it was gonna be similar to maybe this day and have a red day the next day. So I did short some more here, right? Specifically INVO. Tried to short right around red green out the open, thinking they were just gonna fade it off. They hold it up, again. They break that high day move. I cut it for, again, negative like 3 to 4 grand. Again, adding up on top of what already was a too big of a loss on AMC. Now I'm continually right back to adding in the smaller losers, which again is okay, but nonetheless, it wasn't a good trade. This is not an ideal trade for me. This is not something that would have been taken had I not taken, right, the AMC trade, right? There's almost like where it's not revenge trading, but the downtrend is now starting to topple on itself. And when I start to feel that, that's when it really wakes me up, thankfully. And so, because I took it here, another trade on RLY, Riley here. I remember trying to short it yesterday on this huge wick candle, thinking it was going to go lower, like already chasing it after it's already sold off nearly 50% in the last 5 days. I lose on that too. Now I'm starting to revenge trade. Now I'm just trying to see what anything moves and see if I could even pull a single dollar out of the market, right? And again, that's when I had enough. I said, yep, nope. We're now down, almost just under 10 grand on the day. Now down, again, the total, drawdown is now just over 63 grand, like we talked about. Now, granted, had I not taken my AMC loss, would this be a drawdown? I still think so. Of course, I wouldn't be 60 grand, but I'd be, again, with all the small losses add up, all these here, I'd be down 10 to 20 grand. Right? It would be in that range. And so it's one of those things where it's not as bad as it would have been had I not avoided the big loss, but it's still present. My win rate is still 30%. It is still not a good place to be. My average win to average loss is now really, like, it's 1-to-1 because of the AMC big loss, but it doesn't negate the fact that we're in a drawdown. I mean, I'm in a drawdown and it doesn't look good. Will I come out of it? Absolutely. When? Who knows? But I know the most important thing to do is to size back down and to start taking and being more picky, right? Not just taking random trades here and there, really sticking to what I think is really my best setups and or sticking to trades I think are just very high conviction. Now, again, I said that about AMC was dead wrong, but I think from doing that, I'm able to now go reset to where I know I trade best, which is really put a hard filter on everything, right? It's like before I take every trade now, I'm asking myself, what's really, it's like I double check everything. What's really the chance of this working? What does this really look like? What do I actually want to risk on this? And I just double check it, right? Do I really want to risk 3 grand or do I really want to risk 2 grand? Right? Do I really want to cut my risk in half? Is this really worth trading or is it actually likelihood I stop out more than not? Right? Just putting an extra kind of secondary backstop on like my mental game of asking myself twice, so like, is this worth it? And I think that's important, right? That's going to get me to lose less. That's going to get me to size down and rethink certain trades I'm taking. And on top of that, I think I'm going to do that. Even if once I get out of this drawdown, I think it's something I should probably continue to be doing even through the rest of this year. Because what happened is from this drawdown, it got me to reflect on my year. And I want to share these stats with you. The first half of the year, and I shared this on Twitter. I tweeted about this. A lot of people, I think, liked it. So I want to share it here. First half of 2023, 780 $83,000. So again, January through June, awesome first year, right? I had some of my most profitable months of the year on. If we go back, right, I had a huge banger of a January, right? 280 grand, then 87 grand in February, 100 grand in March, 40 grand in April, 180 grand in May, 96 grand in June, like just back to back, really good green months. But if you look at the second half, we do July, I start off red, negative 32 grand. August, negative 21 grand, or sorry, positive 21 grand. Positive, but one of my lower positive months for sure. September was pretty good, 61 grand. That is the highest month of my second half. October, another lower one at 32. And then here we are in November, pretty much getting all of October back and some, and biting into September. So when we look at the actual stats, now the second half of the year, I'm only up 30 grand. Huge difference, multiple times smaller than how the first half went. On top of the fact, if you look at my win rate, I was winning 60% of the time in the first half. I'm barely winning 50% of the time now in the second half. My average win was nearly 9 grand in the first half. This second half is 57, so a full almost 50% decrease in how big of a gain I'm making per win. Average loss was 47, negative 4,700 in the first half. It actually has gone up $500 to negative 5,200 in the second half. But again, the big key is that my winners are not being nearly as big, and my winner or my loser are slightly getting bigger, because now in the second half, my average win to average loss is almost like a 1-to-1. It's not that great. And if you put a 1-to-1 risk reward with a nearly 50% win rate, that is not a profitable strategy. That is on the verge of being unprofitable, which makes sense as to why I'm only hovering around 30K in profits. In terms of number of trades, I wanted to see what this was. Was I taking less or more trades? I'm on pace to be about the same. If I took call it rounded up to 300 trades in the first half, I still have a month and a half. So I could be around 250, 260 by the end of the year. Who knows? But the point is, I wish I'd known this sooner. Had I was able to see my stats being way less, even before this drawdown, right? Even before this drawdown, mainly in November, I should have immediately also took notice that back in July, I was red. It's like, that's not a good start. I rarely have red months. And so if I do, I need to take notice. On top of the fact of my August also not being nearly as good, not even making back what I lost in July. So there were signs, and it sucks that I didn't notice it sooner, but I'm glad I'm noticing it now. And the reality is, it's like, if I had noticed it sooner, I should have been taking way less trades. I should, again, the pickiness that I want to implement now, I should be implementing that sooner. Because if I had, I'd probably be way less trades than 204. Ideally, I'd be more like 100 or 150, right? There's just a few trades that you can cut out. You're really going to make a difference of your bottom line. And again, one of which, AMC, right? Maybe I 100% would have still taken the trade, but instead of losing, 50, 60 grand, it would have been nice to only lose a 10, 20. Would have made a big difference, and I would have been in a much better place to possibly even end November green on the month. But the way it's looking now, I'm already fully accepting that I just might end November red, which is okay. Again, it happens. I pretty much had to do the same thing for July. When I was red at a huge red day here, I pretty much had to accept that by the end of the month I wasn't going to make it back, so to speak. Again, which is the huge part of getting out of a drawdown, is accepting the fact that you're here and you're not just going to quickly make it back to avoid the stress or the pressure or the uneasy feeling of being in a drawdown. So yeah, that's it, guys. Hopefully you guys learned something. I know I certainly did. I know what I need to do to get out of this. Doesn't mean I'm going to get out of it right away. Like I said, if I remove all the things that have getting me in this position, I can start focusing on the things that are going to get me out of this position, aka be profitable. So anyways, like and subscribe, guys. I will see you guys in the next video. Maybe we'll do a part 2 and update you when and how I eventually do get out of this drawdown. But anyways, thanks so much for watching, and I'll see you guys next time. Peace.